Good morning, everybody. So here we are, game plan time. My name is Gareth 𝗖𝗽𝗶𝘁𝘁, Chief Market Strategist and Master Trader here at VerifiedInvesting.com and in themoneystocks.com. And we are going to get into it today. I got so much alpha for you guys today. So without further delay, let's just jump over to the charts. Let's talk about the Federal Reserve. So what you're seeing here, this is the 10-year yield chart. Now remember, we talked about, and this was the key, guys, right? We talked about how we could absolutely see that rates potentially were topping at 5%. We got the even number pierce, we have the trend lines up here, and so forth. Yesterday, the FOMC decision came out. Markets gyrated up, down. It was really during the speech. It was the 2:30 Jerome Powell speech where he started to hint that maybe the Fed was done raising interest rates. He basically was saying that this rise in interest rates on the 10-year yield had already done the work for the Federal Reserve, and therefore they might not have to raise rates additionally. So what did we see happen? We saw the 10-year yield starting to come back in, collapsing yesterday. This is the daily chart. Collapsing again today. I'm going to go over that. But again, this is a chart that I guided you guys to exactly what I said would happen, right? So again, if we just look at this, and I'm going to zoom in just a little bit so we can really divulge and talk about the technicals here. But what did we talk about in the last game plan? We talked about how we had this pattern, right? Down move with a flat kind of wedge pattern like that. That is a bearish flag. Notice how the highest point is the highest point declining to the lowest point, and then this is choppy inside bar action. Again, that tells us that likely you're going to see downside. What ended up happening? Probabilities played out, and we saw the down move, and we're seeing additional down move today. And I want to be clear, folks. There's no magic bullet. There's no crystal ball. All it is probabilities. That is all I am doing here. It doesn't take rocket science. It takes understanding the formation, simple formation, wedge pattern off of a down move, essentially a bearish pattern of consolidation. What is the probability telling us? It was telling us to favor a down move in yields. And what happens? The yields come to the downside. And again, I think that's so important because a lot of investors out there, they're like, wow, to become a pro trader, you just have to be so amazing and you have to be so knowledgeable and you have to have a huge IQ. No, to be honest, you don't need a big IQ. I don't have a big IQ, that's for sure. All I know is I've recognized, and I've done this for so many years, that I recognize the patterns and I just play the odds. That's really all it is. It's playing the odds, putting the odds in your favor, favoring that direction. We've talked about TLT down in this range. We're seeing TLT starting to spike up. Basically, that's an inverse yield play. So when yields go down, TLT goes up. Okay, so where was the target that I talked about with you guys on this chart of the 10-year yield? Well, simply put, I told you guys this already. I said this pivot low right here, essentially that is your target price. It's approximately 4.55%. All right, now could it hit 4.5%? Sure it could. But generally, this will be your first technical support. Now, I want to be clear. We may only see a small bounce off of that before further downside. But right now, that is the level to beat. That is the level that we should see some sort of test of technical support on the charts.